Have you ever wondered how the Bank of Canada's overnight policy rates influence your borrowing costs? Well, my name is Lucas Bollahood with the Bollahood Group Real Estate Services, and we're going to take a few minutes today to dive into the differences between, or the impact, I should say, on the Bank of Canada's overnight policy rate and how that will affect your mortgage, and what really affects the variable versus fixed rate interest rates out there in the market today. Earlier in September, the Bank of Canada announced a quarter-point cut to their overnight policy rate down to 2.5%. But what does this mean for your overall borrowing costs and for your mortgage specifically? Well, the Bank of Canada's overnight rate is essentially the starting point for most borrowing costs across the country. This is like the interest rate that the bank pays to each other when they lend money back and forth for short periods of time. And when the bank raises or lowers interest rates, it creates a little ripple effect across mortgages, loans, and other lines of credit. So when you look at a variable rate loan or a variable rate mortgage, there is a direct influence here between the overnight policy rate and what happens with the variable mortgage rate type product. And those are usually tied directly to what they call the lender's prime rate. And that rate is essentially what, when the Bank of Canada moves the overnight rate, they're going to adjust the prime rate accordingly, and usually within a day or two. Now, if the bank increases the rates, they're going to, in step, increase the lender's prime rates as well. And if they go down, they'll adjust accordingly. Now, if you see the bank start to lower rates, this often can have the opposite effect, where borrowing becomes cheaper and your payments essentially will decrease. And that is, again, specific to variable rate mortgages. So when we see the Bank of Canada adjust that overnight policy rate, there's a very strong chance that you're going to see a direct correlation or direct adjustment to your variable rate mortgage products. And that brings us to fixed rate mortgages and the influences that the overnight policy rate has on the fixed rate market is actually more indirect, unlike the variable rate type product. So a fixed rate mortgage is based on the yields of the Government of Canada's bonds, often the 5-year bond rate. We'll often see longer term bonds like 10-year or beyond that as well have an influence on fixed rates. And the bond yields move according to the investors' expectations for things like inflation and future Bank of Canada decisions. So when the bank signals that interest rates are going to rise to fight inflation, bonds will often climb in advance of that decision being made, pushing mortgage rates, or fixed mortgage rates, I should say, higher, often before the official rate hike takes place. So if the market does believe that rates will stay low or start falling, you'll see bond rates start to drop in advance of that as well, sort of like a leading indicator of what might happen in the fixed rate environment. So the key takeaways from this and the differences here between the impact on a variable rate mortgage versus that of a fixed. Well, variable rates follow the Bank of Canada almost immediately, and they will often adjust to each other in step, whether it be up or down. When you're talking about the fixed rate, though, those follow the bond market, and that reacts to what the Bank of Canada expects to see happen into the future. And that is often indicated in the bond market, and they'll make those decisions in advance of rates at the Bank of Canada changing. So the very different things that we're looking at between fixed and variable rates. As you say, the Bank of Canada's overnight policy rate does not impact your fixed mortgage. So if you are currently shopping with a fixed mortgage rate, don't expect that you're going to see a drastic change to home values or to your borrowing power as a result of that rate cut in September. So the next rate announcement with the Bank of Canada is October 29th. So if you have any questions about that heading into the fall, feel free to reach out and we'll be happy to chat with you and guide you there. So with that, thanks so much for watching. Have a great day. Bye for now.